Hi, I'm Tillman from Good Investing, and I helped Rob with supporting his event with a live stream. Sadly, this video needs a bit of an introduction because we had technical problems while streaming it. So the stream is a bit messed up. The audio is clear and crisp to hear, but sadly the video isn't really working. We have a kind of picture stream, so you get an impression from the discussion, but no clear video. But the podcast or the video audio format is great. So please enjoy it.
Darryl.
Yes.
Welcome. So I actually invited you to come to the meeting in January of last year, and you very graciously agreed to come. And of course, we had to cancel. And then I invited you back again for January of this year, and you very graciously agreed to come. But we had to postpone. And so it's third time lucky. And thank you so much for your persistence.
No problem. I'm excited to be here.
So, one thing you have to know about the business owner investors is that they're a tough bunch. And I was, so typically when I meet with them, they want to hear about where I'm invested in. And a few years ago, there was a lady, and I explained to her that we're invested in a pet insurance company. And she asked me a little bit about what pet insurance was, and she was looking kind of confused. And then she said, "Yeah, but why wouldn't you just buy a new dog if it gets sick?" Now, I won't say where she's from because it would be very unfair to my South African friends. But having said that, I should also say there's a different reaction, which I also get sometimes, is to people it's completely clear why you have pet insurance. It's not even a topic that if your dog was sick that they would spend a lot of money on it. So, but maybe you can start us off by saying from your perspective, what is the problem you're solving for people? What is the reason for pet insurance?
Well, for about half of humanity, we live with pets, and at least half of those people, so 1 in 4 people, the pet is a big part of the family. And for many people, and maybe it's not quite as high as their children, but it is very close. In some cases, it's higher than their spouse. We know that the pets give us unconditional love, and it's hard for humanity to give us unconditional love every day. I know that when I show up late from work and get home, my wife is often mad at me, but my dogs are happier to see me. So for that percentage of the world, it's very, very difficult for people to budget if and when they're sick, the pet becomes sick or injured, or how much that's going to be. The simple math of this equation is, if I was to say a golden retriever, a common breed in the United States, and if you came into a veterinarian and you said, "I have a golden retriever, it's a puppy, how much should I budget over their entire life?" First of all, it would be very difficult for somebody to know the answer to that. Fortunately, we do, and I'm going to make up the number, but give you an example. Let's say it's $10,000 is the average over the pet's entire life that they're going to need to spend on veterinary care. But the difficult part is it ranges between a lucky and an unlucky one. And an unlucky one might be $60,000, and a lucky one might be $1,000. And with such a wide variety, it's very difficult for people to budget. So our goal is to make it easier for people to budget. We understand what it is. We put a small margin on top of it. And then regardless where the pet lies and being lucky or unlucky, we're there for them 24 hours a day, 7 days a week for the life of the pet.
Just to give people a sense, how big can a vet bill become if a dog is really sick?
$30,000, $40,000 is something that we pay daily. $5,000 and $10,000 is happening thousands of times per day, and $50,000, $60,000 it happens more than people think. If you to run a veterinary hospital, the equipment that you need and everything you need is the same as you do for a human. It's the same equipment, the same costs, and yet when often people don't know what the cost of human care is. But if a human being has had surgery and then needs to stay in the hospital for 5 or 6 days, that could be $100,000. And for a pet, veterinarians don't charge as much as they need to, but for a pet, that could be $45,000.
Yeah, and sadly, if people can't afford those bills, then the dog is euthanized, right?
It's too frequently that that happens. And if you start to interchange your pet with the word your child, it becomes pretty obvious why we're solving a problem.
Yeah. So going back a little bit, what I always love to hear when I have the opportunity to speak to an entrepreneur is the origin story. So where did the idea come from? How did you get started?
So today I'm 52 years old, born and raised in Vancouver, British Columbia. And when I was about their age over here, I went to a vet hospital on the weekend with my parents. We had our 2-year-old dog, and our dog wasn't feeling very good. So I went with my mother and father and our dog, and we're waiting in the waiting room, and the veterinarian came out to us and said, they had a mask on, like some of us in the room today, kind of came out without their mask, and they said, we know what's wrong with your dog. The good news is we're going to be able to solve it. It's a pretty simple surgery, and it's quite common, and your dog's going to live another 12 or 14 years after. And the veterinarian was very relieved. And what had happened is the dog's stomach had twisted, which is quite common for the breed of dog that we had. It was a standard poodle. But my parents didn't have the money. They said how much it was for the surgery, and my parents, they couldn't afford it. So we left that day without our dog, and it was a horrible experience for everybody involved. I'm a teenager, and I've just lost my my buddy, my family friend. I saw the despair on the veterinarians and their staff who spent their entire life trying to be able to fix and help pets, and they were devastated. My parents didn't only lose their own pet, but they were deeply embarrassed that in front of their son, they weren't able to budget and prepare for it. So it stuck with me, and roughly 14 years later, I started Trupanion.
What were some of the big milestones? How did you get started, and what was the journey?
Well, I graduated college at a very early age. I graduated at 19 with a major in advanced technology marketing, which basically was like selling stuff with blinking lights. And I spent about 4 or 5 years of my life wearing suits, selling to the cellular industry in the early 90s. You don't have time for the whole story, but eventually I left that, and I decided that I wanted to do something bigger in my life. And I wanted to start Trupanion, and I didn't have the money to do it. So I used a $5,000 credit card, and I started a cigar business. My dog was with me. Monty was with me every day at the cigar business, kind of reminding me, don't forget to do Trupanion. And I built and sold that business, sold it for $500,000, and then took that money and started the Trupanion about 23 years ago.
Yeah, and the first policy you wrote was for Monty, right?
That's right.
What were some of the biggest challenges of, insurance to me? Like if you want to start a coffee shop or, I don't know, a car dealership or something like that, I can see a path to that, but insurance sounds like difficult and regulated. How on earth do you start that?
Well, it's hard. I think being blindly naive helped. there was many people that said, listen, this is a heavy regulated, and I just said, I don't care. I mean, there's a problem to be solved. We should be able to fix it. The people that were in the market trying to do it weren't doing it very well. I just asked a lot of people for help. And eventually, over a long period of time, and a lot of no's and a lot of rejections, people eventually said yes. There's a gentleman named Ross Totten, who was a big help in getting things going in Canada. And his wife, Joan Totten, loved her cats. And probably if Joan Totten didn't have those cats, it probably may have not worked out. But yeah, just getting help from people.
Yeah. And you mentioned, I mean, why is this something that nobody else has really done? I mean, I remember when we got our dog 7 years ago here in Switzerland, one of the first things my wife said to me was, we should get insurance. But the reality is, in Switzerland, there is no pet insurance. I mean, there's people willing to sell you a policy, but it's not a policy that really works. Why was no one really addressing this?
Well, we'll talk about the Switzerland problem maybe a little bit later. But if you... A gentleman was talking to me over here, and he said, he talked about Trupanion having a big opportunity. And an opportunity might be spelled by some people by saying, this is a place to make money. And I never started the company to make money. I started the company to solve a problem. If you solve a problem well, it needs to be economically viable for it to be sustainable. If we're going to be able to impact tens of millions of pets, which we will do, it needs to be economically viable. But it's not the starting point. And most people that are in insurance, if they're thinking about getting into this, are thinking about how to make money. And I just think it's a wrong starting point. I mean, do we want to make money off of our children's health? I don't know. Not how I want to spend my day. So I think it's just the orientation. I think it makes a difference. I mean, we ring a bell when we pay a $10,000 invoice. We get excited because we know that the bigger the invoice that we paid, the more excited we are that we know that we made an impact. So, yeah, I think it's just a different point of view.
So you mentioned market opportunity. How big do you think the market is, and how much of that market over time do you think you can serve? Which market are you talking about? Pets, dogs and cats in North America.
In North America?
Yeah. Well, let's start with North America, and then we can talk about outside North America.
Well, there's about 200 million cats and dogs in North America, and
against a population of around 300 million? Or?
Yeah. So about 300 million humans, about 200 million cats and dogs. About 1 in 2 households have a pet, and the average household has 1.4 pets. So about 50 million there in Canada and the United States. We will be increasing our addressable market by expanding, doubling that size at least to other places in the world. So I think our addressable market, I'm not saying we'll get all 100 million, but in the markets that we're addressing over time, 100 million pets.
Yeah. What presumably not everyone is in the market for insurance. So what of those sort of those pets, how many do you think, not necessarily with Trupanion, with one of your competitors, but how many do you think would over time get insurance.
The 100 million. So yeah, I mean, if you look at it, let's just focus on North America. There's 200 million pets. As I opened up, it's about 1 in 4 pet owners who really think about their pet as a part of their family. You know, they're sleeping on the beds or on the sofas with them. They're on their Christmas cards, or they're at that level. You know, maybe you had somebody that was from some country at some point that may have had a pet, but thought of them more as a farm animal, that they're replaceable. And then there's people that don't have them at all. But yeah, one in 4 pet owners, pet owners, 1 in 4.
Yeah, and just to give some context around that, today you're at around 600,000 pets that you insure.
Yeah, on the Trupanion, it's about 600,000. We have a little bit more on with some other brands and stuff. Yeah.
Yeah. So it's a big market opportunity. I don't think anyone doubts that. If there's a question mark, it's around the unit economics of the business. Maybe you can talk a little bit about how you see those.
So we understand what the average cost is. Let's say it was $10,000 for a golden retriever. We add a margin on top of it. Our margin is about a 28 or 29% margin on top of it. So we would charge, let's make it easier and say 30% on top of it. So we would charge $13,000 over the pet's life. And we would break that into monthly payments, and the pet owner would pay that over their life. It does adjust with inflation year after year, so it's not a static number.
So like on average, I think $50, $60 a month would be the...
Today, we're averaging about $65 a month. When I started the company, we were about $20 a month. So there is a lot of inflation in veterinary medicine. And with that margin, about half of it is used for us to be able to be there for the pet 24 hours a day, 7 days a week. It includes credit card processing fees, paying accountants, lawyers, and everything else we need to do it. And we end up with about a 15% margin. So with that 15% margin, I think it's a good value proposition for the pet owner because they don't know if their pet's going to be average or not. So you're basically paying a small premium to us, a 30% premium to have that benefit.
Certainty that under all circumstances you can pay for the care.
Yeah. And so if I get a pet enrolled and I make $1,500 off of every pet I enroll, those unit economics seem pretty good as long as it doesn't cost me $1,500 to enroll them. And if I'm spending $300 to enroll a pet and I get $1,500 back over their life, I think those unit economics are pretty simple.
So we have a large market opportunity. We have attractive unit economics. That typically attracts competition. Mm-hmm. So why, and there's some very large, successful insurance companies out there, and I think of Geico, some of the large guys, some specialist players. How come they can't eat your lunch?
It's hard for me to say that somebody can't do something in the future. But I mean, I've competed against now over 60 brands. And with people that had companies that had, not 100 times more our size, but 10,000s and 100,000 times more our size and money than we've had.
I think there was once a joint venture between Berkshire Hathaway and Nestle or something.
There's been a lot. There's been some big companies.
Difficult to imagine a more powerful combination than that.
At the end of the day, this is all we do. We're vertically integrated. We're trying to be as efficient as we can. We're trying to be the low-cost operator so that we can give as much back to the pet owner. Right now, I told you we're targeting about a 28 or 29% margin. Our goal in the future is to target a 25% margin. And we'll do that by eliminating more frictional costs. We're going to keep our 15% profit margin, but every every dollar we save above that goes back to the pet owner. So kind of think of like a Costco model.
I was going to say, that reminds me of another company in Seattle.
Yeah. The other part that is interesting is we have, we're the only company that has people visiting veterinarians on a regular basis. So they're called territory partners for us, and they're visiting a veterinarian on a regular basis. And if, let's say some other brand runs a Super Bowl ad or a TV ad and they get a pet enrolled, and then when that pet becomes sick or injured, they go to the veterinarian and the pet owner has to pay out of pocket, fill out a bunch of paperwork. The experience is difficult and hard. The likelihood of that person staying or telling their friends is low. Whereas we have relationships with veterinarians so that when a Trupanion pet walks into the door, that client's going to get as good of an experience as possible. And the reasons that a veterinarian likes and support us are unique to us. One is we have the highest value proposition. Number two is we're covering the most that we can possibly cover. And number three, we are designed to be able to pay a hospital directly in under 5 minutes. So the pet owner doesn't need to be out of pocket. And our relationship with the veterinarian, we have now to date made over 2 million face-to-face visits with veterinarians. Geico hasn't made any visits. They haven't built those relationships. And if they were to start, I don't think they have a compelling pitch. I don't think they're going to say, oh, we're willing to pay out 85 cents on the dollar. The unit economics don't work. The people that are dealing with our claims are not transportable. It's the same person who does an auto claim can't, everybody that does ours have worked in vet hospitals for years. So what we have is unique. I'm not saying it can't be copied, but it's not easy to copy.
One of the things that has influenced me as an investor, and which I talked about in my letter this year, was the way, we investors are looking for, competitive advantage and entry barriers when we look at companies. And, as many of you know, entry barriers are brands and network effects and that kind of stuff. And, Trupanion for sure has a strong brand and other competitive advantages. What's always impressed me is the attention you guys pay to just improving the business day after day after day. Maybe you can give some examples of that. I'm thinking maybe around conversion or installing the software. I think it where you want to go.
Yeah, I think the most best way to think about our business is people pay us monthly. They can cancel any month they want. So we're a monthly recurring revenue business, and literally every month we start the same place. How many pets are we going to enroll this month? How many pets are going to get sick? How many invoices are we going to pay? How many pets are going to cancel? How many pets are we going to end up at the end? And that retention rate for Trupanion, when we first went public in 2014, was about 98.5% per month. So about 98.5% of people kept it per month. And today, we're about 98.7% per month. That incremental improvement from going from 98.5 to 98.7 has meant that our stream of cash flow that a pet stays with us has increased by over 2.5 years, which means we can spend more money to acquire a pet. And the incremental effort it takes to have, we already had the best retention rates in the world in our category, but it's on every telephone phone call, it's on every time we communicate, it's every time we pay a hospital directly, and it's monitoring and managing it in a very small way. So, incremental improvements.
And in a spreadsheet, a move from 98.5 to 98.7 from the perspective of an investor looks like a small rounding error, but that's what you guys work on every day, right?
That's right.
Yeah.
Yeah, it's the difference between going from, roughly 58 months to 80 months. The average pet stays with us.
And then at the end of it, people say, oh, well, this is a great business because look how sticky the customers are. But the customers are sticky because you do a great job, not because because of a brand or a moat or whatever.
Yeah, I mean, they stay with us because we have the relationships with the veterinarians. They stay with us because we're paying the veterinarians directly. The reason the veterinarians allowed that is because for years we've been visiting them, telling them why we offer value. I mean, so it's not something, I read your letter as well. Moats are not a decision. By definition, a moat is very, very difficult to copy. To copy our moat would take somebody 15 years. I mean, it took us 22. So, I mean, they could take our footprint and say, I'm going to copy what they did, but you can't do it in a year. It's not possible. I couldn't do it in a year. I could replicate what Trupanion's done probably in 15 years if I had to start from scratch.
So up until 2020, the focus of the business was primarily on Trupanion Pet Insurance North America. Mm-hmm. And then a year ago, you and your team published a 60-month plan with a number of much more ambitious goals outside of North America and in different markets. Maybe you could talk about some of those opportunities you see, the ones you're most excited about.
Well, one of my jobs at the company is to make sure that I make it easier for the team to be successful. And if you're reliant on one area, some people think that's going to drive better focus. But I would tell you that it also creates a lot less opportunity for new people in the company, and it creates a fair amount of stress. So in 2005, we were adding stores, adding vet hospitals recommending us. And I did not know how to increase same-store sales. I couldn't figure out how to get them to recommend us more frequently, but I could get them to recommend us. And our average same-store sales was 1 new pet per vet hospital per month. And I knew I could get that better, but I didn't know how yet. So,
how many pets would typically register? How many new puppies would come in a month typically a day?
So to an average vet hospital, we would have about 30 opportunities, 30 new puppies and kittens, and we were getting 1.
Yeah, so 1 in 30.
So in 2005, I said, let's make it easier for us. So we expanded from Canada to the United States. Canada had roughly 3,000 vet hospitals, and the US had another 23,000. So we didn't have to learn a new trick. But it didn't mean that I didn't want to improve same-store sales. It meant that now we had 2 levers to grow from. And at any given time, maybe my new stores could slow down, or we could have a hiccup or a challenge. But if my same-store sales was increasing, that would do it. So I had 2 growth levers. And what we've done now with our 60-month plan is we've added about another 5 levers. We've added it by adding some new products and channels. We've added it by adding new geographies. And that means for a company that is trying to, I'm trying to grow intrinsic value 20 to 25% every year.
Increase the value of the company by that much every year.
20 to 25% per share every year for the next decades. And we have done that consistently for the last 2 decades. And I don't want to just do it for 2 decades. I want to do it for at least 4 or 5 decades. And I don't want to do that for money. I want to do it because there are hundreds of millions of pets that we're not helping. So for us to fulfill our mission, we need to get a lot bigger. And having those multiple levers means that you can hire and attract great people, and sometimes they can stumble and fall, and it's okay. Everyone doesn't need to be, running perfectly at every moment. People will take a breath. They can get off the treadmill if they need to. Life happens, right? And so those new opportunities we have.
Which are the big ones? Which are the ones you're most excited about?
Well, I mean, we can go in reverse order. We're going to double the size of our addressable market by adding, going to Europe and Asia. So we're going to go from 25,000 vet hospital universe to 50,000 over a long period of time. Our goal by the end of 2025 is to add 10,000 hospitals in our addressable market. We've added 2 new products, a low and a medium price product meant to be sold primarily online. It's not something a veterinarian would ever want to recommend because it doesn't cover as much. But it does mean that when some customers are more price sensitive, that they could buy another product from us. We're also looking at adding pet food as a potential product extension to help our pet owners, budget and care for their pet. So those are kind of and then we've got some distribution channels as well.
Yeah, and I think the pet food one is intriguing because you've run tests that if the pet is compliant with the food regime, then it leads to a healthier pet, which can feed through into a lower insurance price.
Well, it's more of a hypothesis right now. Have you guys read the book where that guy ate McDonald's every day for like 2 years or something? And like he grew a third head and a leg fell off and, a bunch of weird things. The theory is similar. If you were to eat the same processed food over and over and over again, there's probably a better way. So we think that if you eat a high quality food in the right amount of calories, you're going to have a better health outcome. And most veterinarians would say, yeah, that's pretty obvious, but there's never been data to study it. With monthly recurring revenue, monthly subscription food companies now, and food being delivered to the house, now you're able to know what a pet is being fed. And if you know what they're being fed, you're going to be able to measure it. And if you're able to measure it, and a pet that eats one type of quality food is 23% healthier than the average pet, then we could give them a 23% discount on our insurance. And by giving a 23% discount on our insurance reinforces that you should buy that food, because why would a crazy insurance company give you a discount unless it actually made your pet healthier? So we think the two of them are connected, and that we could get veterinarians to help us share that message. And the light is on.
One final question, then I'll turn over the microphone to the floor so they can ask their questions as well. You've said you plan to step down as CEO in 2025, so the primary operational head of the company, and will become chairman, which is more of an involved position, but more of a supervisory one. And in 2035, so long-term planning, you plan to step down as chairman. What is the rationale behind this plan?
Founder-led companies have a lot of benefits, but they have a number of trappings. Well, first of all, a founder may not scale. And, I may not scale next year or the year after. So, I've got a board, and if I don't, they'll chop my head off and I'll be gone. But it is very difficult often for other strong voices in a company to have the impact in a company if there is a founder that is around too long with too strong of a voice. Starting last year, I have rarely showed up to a management meeting. And last year, we created more intrinsic value per share than we've ever done in the company's past. So, kind of, if I just look at the math, it says, Darryl, don't show up to work. Now, I think it's important that the values that we have and the culture and some other things remain instilled. And, I've got a very deliberate plan to make sure that, the team takes things and runs with it over a period of time. So I just think it is the healthiest and the best thing to be able to attract the best talent. You have to give room. And I've been reminded recently when people stay in power too long, what happens to them? We're all watching it, and it's not healthy. So I think it's just the right thing to do. Now, personally, I'll give you another reason that is really important to me is if Trupanion requires me to be successful, then I failed. Absolutely 100% failed. You want your children to leave the house and carry on in their life and to do it on their own. And you want them to be better than you have ever been in your life. There's no difference.
I've seen that many times with founders that their ultimate dream is for the company to work without them being there for something that can, outlive them.
Yeah. Yeah.
And if it runs into trouble, you can do like another one of your neighbors in Seattle, Howard Schultz, and make it come back.
The way that... So my plan was first announced in 2014. In 2014, I said when we would be cash flow positive, when we got to a certain stage. I said when we would do a number of things. I said at that point, I'm committed to be CEO if I'm capable until 2025. And then I will remain on the board if interested until 2035. This is not something new. This is something that we've been talking about and planning for a long time. And, the last year was great to see, the team, that they did really well without me being super hands-on.
Yeah, you have an incredible team. I've had the privilege to meet many of them, and really an exceptional bunch of people. Okay, with that, we have about 15 minutes left, so I want to give you guys also the opportunity to ask a question. My two daughters, Amelie and Olivia, have microphones, so just raise your hand, and they'll be happy to pass you the microphone. And if you don't mind stating briefly your name and where you're from, that would be great.
I start.
Alex, you want to go first?
I'm Alex. I'm from the north of Italy. Thank you for having me, Rob, and thank you for your presentation. I'm not a big specialist on your business, unfortunately, but I wanted to ask you about the inflation aspect that you mentioned before. So it seems to me that if the prices of the premiums goes up from 20 to 65, basically, and the veterinary cost is increasing on par, you benefit from that in that your margin on the single is going up. It's a larger amount of money. Isn't there an intrinsic limit to this? So basically you benefit from veterinary costs, but the pet ownership could become too expensive. So could that be a problem for you on the long term?
I've been hearing this question for over 20 years. The average rate of inflation for veterinary medicine has been 6% a year for us every year. Now, in one region, it might be going up 12% a year, and another one, it might be going up 1%, but on a blended basis, it's been going up about 6%. If you think about, first of all, just as a reminder, currently 2% of pets are currently insured in North America. And we talked about an addressable market that we can get to 1 in 4, 25%. We are simply a cost-plus model. So imagine that veterinarians are charging so much that the costs of the affordability is so challenging. It is going to affect the 3 out of 4 pets who are not insured way before it's going to affect somebody that has it broken up into monthly budgetable ways. So, we pay for what a veterinarian charges. We don't tell them what to charge, but it is the same amount for an insured versus a non-insured client. So in your hypothetical model, let's say that they put it up 200% this year, 200% next year, 200% the year after, 200%, and at some point they broke the back of it. It would break the backs of the non-insured before the insured client. And in fact, the more that veterinarians increase their costs, when their costs are going up faster than people's disposable and discretionary income, it is actually increasing the demand or need for our product. Because if we got to 1 in 4, right now we're 2 out of 100, our biggest competitor is people self-insuring. It's people saying, I got this on my own.
Hi, and thank you for being here. My name is Jan, and I'm from Switzerland. My question is, at the moment, you're currently spending almost all of the adjusted operating income on pet acquisition costs or pet acquisition spending. And that makes totally sense, of course, as long as the internal rate of returns are high. But if you're looking into far further future, when you don't find enough for a high internal rate of return spending, what are the use of your adjusted operating income will look like? So what would you think? Is it like for other insurances using the flow to invest or things like that?
I don't know. I might want a 15% dividend. I mean, if we ever got to the point that we said we got to 10 million pets enrolled, and we decided, you know what, I don't want 10 million and 1 pets. I am confident that I could have a 10% profit margin. And as an individual, I'm the single largest shareholder of the company. There's institutions that are bigger than I am. I wouldn't mind a 15% dividend. Maybe after taxes, I'll be able to pay a 10 or 11 or a 12% dividend. But we could do that. There's lots of things. I'm not sure I'm going to be alive when that happens, to be honest with you. I mean, we have decades of runway. We have veterinary hospitals where 25% of their pets are insured just with Trupanion today. And the way that works is, it's not that we go out to every pet in the vet hospital. It's what are all the new pets that come in, puppies and kittens that year, and 1 out of 4 end up enrolling with us. And then you do that for 14 years in a row, and that one hospital is now fully penetrated. I mean, think of where we are today and how long that is going to, that's not going to happen in 20 years from now. Maybe in 30, maybe in 40. Now, we are disciplined, or we try to be very disciplined in that if we can't acquire pets to get a 30 to 40% internal rate of return, I'm not spending the money. So we may grow slower and be more profitable, and that would be disappointing. But I'd be willing to do that. In the beginning of COVID, the first quarter of COVID, we pulled back our spending dramatically, and people were like, wow, look how they're so much more profitable now. I was like, yeah, we didn't enroll as many pets. So that's, as long as we're getting the rates of return, we'll continue to do it. If we can't get the rates of return, then, we can, do dividends or do whatever else we want.
Just over there.
Hi, my name is Rafael. I'm a Brazilian based in Germany. My question to you is, how can you protect the business from some greedy veterinarians that might feel motivated to recommend surgeries that are more beneficial to their pocket than really necessary for the pets?
So, the question is, how do we protect ourselves from unethical vets? And the first part of my answer is, I think, the most important part, is very few veterinarians are unethical. The average veterinarian makes less than 25% of what a human doctor makes. And a human doctor makes less than a dentist makes. It's easier to get into dental school than it is to get into veterinary school. So if you're starting from a place of greed, you are messing with people's teeth, not their pets. So the filtering system solves it largely. Now, it doesn't mean that there are no crooked vets. There are a few. But at the end of the day, we price down to the neighborhood. Like, we're pricing, we're tracking the average cost at a vet hospital level. So in the event an individual vet hospital was acting unethical and the average cost went up, we would charge that. The people they would be hurting are their clients on Trupanion at their hospital. And maybe they would end up canceling, maybe they'd go to our competitor, maybe they just stop doing pet insurance. But it ultimately wouldn't hurt us because we're a cost plus model. And, there's a lot of steps in between that. But we're not trying, we're just trying to understand what the average cost is and put a small margin on top of it. And if we see somebody that's being unethical, we can have a conversation with them. Typically the first conversation solves it. In North America, a veterinarian could lose their license if they were part of fraud. So there's a lot of mechanisms in it. But if you play out, one extreme, we would price for it and maybe we'd have a lower penetration rate at that hospital. On the other end, veterinarians are good human beings and it doesn't happen very often. And in between, there's conversations and monitoring. With our software where we pay hospitals directly, we get access to the invoices of both insured versus non-insured clients. So we know what they're charging for non-insured clients versus an insured client. So it's very easy for us to have triggers and flags to tell us if there's anything we need to look into.
Okay, so we have time for one final question. But Darryl is here the whole weekend, so feel free to continue the conversation with him in the breaks and at dinner this evening.
Hi. Thanks so much, Jonathan Tanner here from London. Thanks, Rob, again for putting on this beautiful event in this beautiful city. It's really great to have everybody together. And thanks, Darryl, for your insightful talk. I had a question regarding the penetration. I know there's a huge TAM there, but in the UK, pet insurance is something like 25% penetration, even higher. They must love their pets more than people in the US, I'm not sure. I guess they have all these dog shows, et cetera, et cetera.
Well, it's not true. So it's about 28% of pets are insured in the UK. But the UK started doing this in 1970. In Sweden, it's over 50%, and they've started over 100 years ago. So the biggest thing is really a time and doing it well.
Yeah, so my question is also, even in Australia, I think it's 6 or 7% or something like that. So what are the KPIs of your management team to sort of get that penetration higher, is the first part of the question. And secondly, I'm just thinking about the competition. I know you're unique in what you do in pet insurance in the US, but are there other competitors in separate channels? Like there's a few of these wellness animal hospitals which sell these wellness plans. Can you maybe talk about that in terms of competing with separate channels? Thanks very much.
Yeah. So the KPIs that we have at the company are long, and I'll go over a bunch of them. But for over 15 years, my board members receive a daily metrics report of today about 42 daily KPIs. And it doesn't just go to the board, it goes to every single employee in the company daily. So they include the number of leads or quotes we received in a day, our conversion rate on the phone versus the web, the number of active hospitals and same-store sales, and the number of 30-day trials that were given out, the number of claims that came in the day, how many were paid directly to the hospital, how many hospitals got our software, retention rates, first-year retention, ongoing retention. So there are many, many, many metrics. Most of the penetration rates that we're looking at is on a per hospital level. So you talked about 5%, 7%, 27%. When we dig in, we're tracking that down to a hospital level because that's where we can affect most of the change. There are competitors both in North America and globally that do some things a lot better than we do, or things that we don't even try to do. Sometimes because we don't think it's a great business model, sometimes we don't think it's solving the problem that we don't want, and other times we just haven't gotten around to it yet. We've been busy growing 20+%